Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, everybody, welcome back. Good morning. Thank you for being here on another live stream. Hey, we're streaming to more places than ever today. I've seen some traders over on kick.com and twitch.com or twitch.tv, I guess. So we've plugged those places in, made A1 trading places. By the way, if you want to help us out, somebody here could be the very first twitch.tv or kick.com subscriber, follower. I don't even know those platforms very well, but we are streaming to them right now. So if you want to be the first one ever, help us out on kick.com. I don't know if anybody, I've seen a lot of traders streaming on kick.com and twitch.tv. Obviously, we do YouTube and Twitter. That's kind of like the main places, but we're adding in some stuff, and just in time because we have some chaotic world events taking place right now, which are certainly moving markets. We'll, of course, be talking a little bit here about all of that. We'll also talk about whether or not there's some opportunities within all this. So let's talk a little bit, first of all, about the geopolitical event that took place this weekend. Obviously, it is a somber subject because anytime you have violence and people, people getting hurt, that's never a good thing. And it has real implications for markets as well. So the obvious one being that it is a risk off type of event when you have escalation, right? So when you have people really uncertain, and I know I have a bunch of people asking me questions in the chat. I'm sorry. I'm gonna first do a little bit of a rotation through everything, and then I'll try and take some questions and answer some stuff. But I'm not ignoring you. I just have a lot of stuff to cover and a lot of questions that have piled up since I last streamed from viewers that I'm gonna try and get through here. Okay, so if we are, look at this, our first. Wow, look at this. We've got some people on Twitch and kick.com. Again, if you use those platforms, be the first follower for us. Nade, you might be our first follower. If you hit the follow button on Twitch, you're the first follower of A1 Trading. That would be legit. Nick, are you back in gold? No, I'm not. I am only long oil right now in terms of active trades. This thing has been a monster in a very weird way. My friend Marco, who of course is on the stream all the time, he sent me a message. He said, "Congrats on the oil trade." And I responded, I'm like, "Thank you." But also it's really weird when this happens. It's weird when you get a trade in your favor like this because of something scary in the world happening. Of course, as always, there's controversial opinions on, what should have happened, what was right, what was wrong, etc. But from just a pure markets perspective, we know that some chaos went down, and that is also surging oil prices here over the weekend. And the market's pretty smart, right? Because look at this. The market knew that there was an increased probability. Before this was happening, the market is very intelligent. It was sniffing out that, hey, the U.S. is moving into position. All sorts of military personnel and equipment was moving in that direction. The market figured it out before it actually happened. And then, of course, when the event happened, you had this sort of gap higher. And I know this is hindsight speaking, but I had a very strong feeling. And I'm still going to say this. I wouldn't be surprised if this is more of a sell the news, because everyone and their brother and their mother is saying, hey, buy gold. It's all, we've got chaos on our hands. This is going to be a chaotic event. And look, it could continue to blow out of proportion. We could continue to see this stuff blow up in our face and geopolitics be an ongoing disaster. But understand that that is the consensus right now, right? So, like, we understand collectively here that the consensus, everyone is worried about what's happening in the Middle East. And so people are positioned accordingly. We call this being priced in. So here I am, I'm long oil. So I'm not, necessarily saying I want it to go down. I'm perfectly fine with continuing to hold this as a hedge in my portfolio. But understand that when we are looking at oil here, gapping higher like this, the market kind of saw this coming to an extent, right? It had increased probabilities prior to this happening that there was going to be some sort of action taken by the US and Iran, especially when negotiations started to sour on Friday. And boom, there we go. Oil prices shoot higher. So what does this do to markets? Good to see you across all streaming platforms. Hey, what's up? We got people on Twitch. That is so cool. Hello, Nick, YouTube from PC and Twitch from phone. Look at you, Basso. Thank you. Thank you for supporting us on our new streaming platform. The other one is kick.com. I've never used kick.com, but hey, we have, I don't think we have any viewers on kick.com, and we don't have any viewers on Facebook right now. So, hey, thank you to the 3 people we have watching us on Twitch. You are real ones, and I hope that you have a wonderful week ahead. Okay, so let's talk about this. What does this do to markets? That's the next question. All right, so we have this oil, blow out to the upside here. What usually happens next? Well, geopolitics are weird, okay? Because geopolitics, just from a purely market mechanics perspective, they are usually, not always, and I want to be careful how I say this, usually geopolitical events come and go pretty quickly, and then risk off turns back on to risk on, okay? Usually. When it doesn't, though, that's where you get some really ugly follow through. So with geopolitics, obviously tensions are very high. We do see a impulsive reaction here of risk off, sell stocks, buy oil, buy gold, right? That's the market's kind of mantra right now. Then you ask, well, what next? Well, I'll tell you, usually within the next few weeks, and I looked at Polymarket for odds on this, by the way, I think there was, at least as of last night, a 55% chance, according to Polymarket, that by March 31st, you would have a ceasefire and things would be discontinued. So market's kind of already thinking, this might, it's scary. The headlines are terrifying. The amateur trader looks at this and says, this is an easy time to buy gold. And that's why you saw that all across social media. Everyone's like, buy gold, buy oil, it's going to rip. Maybe, but smart traders have already positioned for that. That's why it's hard to be an amateur trader, is because you hear all these things and you're like, clearly this is going to send gold higher. Well, you might be exit liquidity. And I'm not saying that to be like harsh or mean, but like, it's just the reality is that a lot of times this stuff is a sell the news type of event because smart traders have already positioned, right? That's the way to play it. Elliot, what's up? Over on kick.com. Look at that. Look at that. We got viewers on all different platforms, guys. That is awesome. So am I saying this is a sell the news type of event? Not necessarily, but if history is a lesson, usually geopolitical sell-offs are opportunities on the risk on side. So if we continue to see sell-off, I'm watching things like the Russell 2000 to see how price action reacts here. So I'm not necessarily willing to stake my claim and say this is all going to roll over by next week. Not there with that. But I am also saying, okay, historically speaking, we generally see these types of events get resolved. Some sort of de-escalation comes next. If that is not the case. Obviously, we may go much lower on US indices. I'll tell you, I personally am watching the Russell 2000. It's got a strong score within Edgefinder. And I saw a good question here. I'm not going to be able to answer questions right now. Again, I have a lot of coverage I got to do, so I'm not ignoring you. I promise. I just got to get through a bunch of charts here real quick. So again, apologies. I'm not ignoring you. It's just one of me and many questions. So let's talk about this. Russell idea. I do like the Russell. I'm going to watch it here. Technicals don't look great as we do have a lot of stuff breaking structure, but I do like the rest of it, right? You have institutions kind of building a position here recently long on the Russell. I like the technicals from a longer term perspective, but I can kind of see here we've got some lower highs forming. So I'm watching the Russell 2000. If we take a look at S&P 500, watch these levels here today real close, guys, because again, how we end up today, I think is very indicative. You had the event, you had the, the feared outcome of, a launch, an attack, etc. And it now has taken place. How does the market respond? That price action could give you some clues as to how things are playing out. So if we are looking at this and we're saying, okay, buyers step in and push this thing off, very well, could this be, a short-term kind of rebound spot? If, however, you start to see a follow-through move, we could get lower. So let's talk about what that follow-through move would look like. Well, if this circumstance continues to escalate, if things do not back down, if things get worse from here, the Strait of Hormuz stays, closed, what does that impact negatively? Well, it causes, as we've already seen, oil prices to rise. But if oil prices stay rising, then we have something different to worry about. If oil prices rise and stay rising, what does that do to inflation? And that is where we can kind of go next with this. Inflation also rises. It's a direct input to the CPI. When you have oil prices on the rise like this, it causes inflation to rise as well. So when you have inflation rising, what does that do? Well, it says to the Federal Reserve, hey, we can't really, in good faith, cut interest rates as easily and as quickly. Why? Because inflation could go out of control. If you already have inflation rising due to this, and then you have kind of lower interest rates, and you can kind of picture together all this and say, well, look, the Fed may close down that possibility, that window of as many rate cuts. So you put into that equation, you say, well, what does less rate cuts do? Less rate cuts is bad for stocks, right? Stocks want rate cuts. What else? Not great for gold, although gold can flourish on just the geopolitical fear factor here, as can bonds as well, right? Bonds, the same story. By the way, bonds are actually lower here in the pre-market, so we'll continue to monitor yields, etc. Yields are actually bouncing back pretty sharply here this morning because, again, if you get a sustained conflict in the Middle East that keeps the Strait of Hormuz closed, what you have to understand is there is a ton of oil that comes from that part of the world, and it goes out to the global markets, specifically countries like India, Japan, China, Pakistan. They are huge users of this oil that is being now potentially blockaded, right? Or is being blockaded. If that stays a theme for a while, inflation goes up because all these countries still need oil, right, to operate. Their economies run on that stuff. So what happens next? Inflation and potentially economic slowdown in those parts of the world. It's not a surprise then that who's falling the hardest? The Japanese stock market, the Chinese stock market, the places that directly use oil from this part of the world. Does this make sense? Geopolitics are really important. Global inflation is on the line when you have this event happen. Now, again, how can I also, all of that just said, how can I also be looking to buy the dip on the stock market? Well, because again, everyone knows this. This is disastrous for both East and West if this does not find some way to resolve. Nobody wants a stock market crash globally. Nobody wants economic recession. It's a terrible, I guess there are some weird people out there that, want to see the world burn. But generally speaking, my point is most parties involved are going to be like, yeah, this can't be a 90-day, 180-day event. And if it does escalate further, which some people obviously are going to think it's going to, I know the headlines are very head spinning, right? You're like, oh my gosh, this thing is blowing up right now. Well, again, the market is smart. The market's already pricing. Look at the VIX. The VIX is up to 23.4 this morning. Gold is already launching, almost back to all-time highs. Oil. So what I'm telling you is the move very well could have already happened. And a lot of people are going to chase after the reality has settled in. And maybe from here, instead of getting worse, things get better. I'm not saying I know what's going to happen next. I'm saying that's generally speaking how these things play out. When it doesn't play out like that, when it continues to get worse, you can get some nasty prolonged drawdowns, and it can even trigger bear markets like in the S&P 500. If we, for example, going back to that worst case scenario, things stay elevated, things do not get better, inflation comes rearing back, yeah, that can send us into where the Fed can't cut rates for a while, global inflation spikes. That is problematic and triggers, or I should say, can trigger larger sell-offs. So you may be asking, well, Nick, you're kind of saying it could go either ways. Yeah, you're right, because I don't know what's going to happen in the Middle East next. I don't pretend to know or have some sort of giant edge on what's going to happen there. However, how am I actually playing this? Well, if certain parts of the market get a nice dip on them, I think the risk reward may be there, AKA the juice might be worth the squeeze. So that's my personal opinion, not financial advice. And of course, if I take a trade, I've got to define my risk on that. So I'm looking at something like the Russell. I've mentioned this is an area that I'm watching. I want to see how price action resolves here. If we can get some nice, rebounds here off of this area, then perhaps there is a case to be made that we could get a little bit of a buy the dip here. And I'll say this now, my educated guess, I'd give it a 55% chance that we are higher than where we are here by end of day than lower. In the 45% chance that I'm wrong, I mean, these are just my own numbers, so we could go lower. So we don't know ever with certainty where markets are going to go, but I generally think that dip buyers will probably step in and buy this dip. That's my opinion, and we'll continue to monitor it. In terms of oil, how am I playing oil? Well, this is kind of a weird one for me because rarely do I have a trade like this where it just gaps up ginormous like this and then has this huge monster red candle. But I'm very attentive to on the 4-hour timeline. Obviously, we had a very strong reaction, at least so far, to this 69.50 area, right? So we had some buyers come in to this general area here on the 4-hour timeline. My plan today is I'm going to go ahead and just preemptively trail a stop loss behind structure here. And I know some people will say, well, Nick, don't you usually wait for a break through those highs? Yes, but this is a really weird circumstance where we have this really strange candle. And I've seen this movie so many times where geopolitics get everyone terrified. And it's just in time for that to turn into liquidity selling, right? So I wouldn't be surprised. I'm telling you this as someone who is long oil. I would not be surprised if this thing came crashing through the lows on some sort of step down from the ledge, if you will, on this geopolitical crisis situation. So again, are things scary? Yes. Are the headlines looking very bleak? Yes. Is there potential that this thing gets worse? Yes. What I'm telling you, though, is that the smart money has already positioned for this. If you are like, how can you possibly be thinking this could roll over? Clearly, it's all going to go to the moon right now. The problem is smart money, smart traders are ahead of moves. They are not chasing it after the moves, right? So you can see it in the price action. Price action thought about this stuff before the weekend took place and said, hey, there's a good chance things go down over the weekend. And sure enough, the smart money was correct. And so there's a good chance that a lot of that was hedging their portfolios, which is why I'm long oil too. I have stocks in my portfolio, et cetera, that I've essentially hedged with this oil trade, right? I'm flat on the day or positive on the day, slightly, I have to check, because this oil trade, which is about 15% of my portfolio's value right now, is obviously flying high today. Now, again, I have stocks that are in the red today for sure, but this was a bit of a hedge in the overall portfolio. So this move, this is where hedged positions paid off big. Now, obviously, I also had, when we look at oil, right, oil continues to get a strong reading within Edgefinder. So when I look at this, I'm saying, okay, I don't want to just take profits on the move either. I think there could be, from just a technical perspective, a reset to an extent, but I think oil remains bid, not for geopolitical reasons, but for fundamental reasons. If we take a look at the rest, let's ignore geopolitics for just a second on oil, and let's say, hey, is there a case to be made for oil bullishness despite these elevated levels? Well, let's go through it. If we talk about the jobs market bias, we recently had really strong jobs report. The non-farm payroll beat expectations by 64,000 jobs. Unemployment rate's at 4.3%. That was better than forecast. We went down in unemployment rate in the latest report. In terms of versus forecast. Weekly jobless claims came in better than expected last week. And so we have this jobs data that is mildly bullish, and that's good for oil demand, right? If you have strong, and by the way, it's good for the dollar. So we'll talk about the dollar here in just a second and all this. That's my next category. So stay patient on me. We will talk. I know there's a lot of people saying euro, dollar, gold, and silver. Look at the indices. I'll get there. Don't worry. I'm just kind of covering the basis here for this geopolitical stuff that everybody is kind of flustered about right now. So inflation bias getting a neutral reading because last week we had some hot PCE and PPI. PPI was before that, but we had hot inflation numbers. CPI came in better than expected though, and the 2-year yield remains moving lower. This is positive for for oil. So we have a neutral reading on inflation and economic growth. Although GDP numbers were poor relative to expectations, PMIs, which by the way, we get some new PMIs this week. So keep a heads up on these two numbers. They will be updating throughout the week. Retail sales, I think we also have that on Friday. I know actually we have that on Friday. So that could update here. And then consumer confidence actually came in better than expected. So we have a mild bullish reading on economic growth and a mild bullish reading on jobs market data in correlation to how it impacts oil, right? So we want to be understanding this is how the scorecard is looking at stuff. Most traders, they'll just obsess over the headlines of the day. Don't do that. If you're going to be a macro trader, if you're going to use fundamentals, you need to look at a holistic compass on what is happening. So when we are trying to figure out, is there a bid for oil from the macro side of things? Let's look at the jobs market. Let's look at the inflation picture. Let's look at the economic growth bias. Let's not just stare obsessively and be exit liquidity on what is happening geopolitically, right? There's more to this story than just looking at the geopolitics. And for me, I've said this many times, I don't have an edge in telling you what's going to happen next in Iran. I can't give you any sort of predictive power on that. What I can do, however, is I can follow technical price action, ride the trend. I can keep an eye on what institutional position is doing, right, through the commitment of traders data. And I can look at the economic growth, inflation, and jobs market bias to build a general picture of which way I want to be looking at oil. And so for me, yes, I remain tentatively bullish on oil. And my plan today is to take this existing stop loss that I have and trail it into profit, locking something in case everything turns around this week for oil. Again, I don't know where it goes with any sort of certainty due to the geopolitical stuff, but generally speaking, I like the macro backdrop, and I think we could see oil prices. Maybe the path of least resistance this week is to chill out around here for a little while, but then I think that there may still be upside potential, not necessarily due to geopolitics, but because of the things that I just spoke on. Hopefully that was helpful. That's the oil update. Let's talk about the dollar. Dollar index is flying high here and breaking through that 98 level of resistance. Guys, we've been talking about this for some time. And also to Lee's credit, we have manufacturing PMIs. Thanks for that. So yes, we will have some interesting data coming in pretty soon on that front. I think we also have Ivan, who is ready to join in on the call here. I think we could bring him in. Maybe I could get his thoughts on this, especially as we now talk about the US dollar. See what he has to say on this topic. Let me see if we can switch him into the picture here. Let's see. There we go. Hey, Ivan, how are you?
Pretty good.
Ivan, it was a crazy headline this weekend, and it's good to be back on the call with you here. We have dollar breaking out. Is this pretty standard stuff in terms of dollar breakouts to the upside like this? Does this make sense to you? And do you think there's a continued bid on the dollar from here, or is this something you would fade? I know you were in the background listening to the oil conversation. You actually are very keen on this topic about how a lot of times with geopolitics, the move happens, people chase it, and it's too late. Is that a fair thing to be thinking about with the dollar, or is it different?
Yeah. No. That is mostly a oil or at least gold idea or scenario. Yeah. I think it can also be applied to dollar, and we had a planning meeting yesterday in the group, which I love. And the market was gap opening like 1% or so, and that's for oil. So the moves wasn't that much as we thought. We were even hearing about $100 per barrel in oil, but for dollar, yeah, I think that whatever is happening upside wise will fade out soon. What I didn't kind of account for was the development that has happened between that meeting and now.
Yeah, and it's one of those things where I say this often, we don't really have any sort of major predictive power. At least I don't, because I don't really follow this stuff like super intuitively. I know there's some people who are very geopolitical traders, like they will really obsess over one part of the world and trade around that. That's just not for me personally. But generally speaking, the trend is there. If you were to look for dollar continuation plays, I actually had a pretty good trade on the pound dollar. I was able to short it and took profits on this one here this morning. So do you have any currency pairs against the dollar specifically that you think are better than others if you were to be looking for dollar bullishness?
Dollar, yeah.
Okay.
For continuation, I was long euro dollar, and I was stopped out at 16.99, and that's basically where the bottom is. But for new times, for continuation now, that would have been a dollar yen trade, because yen for some reason is weak, and dollar continued to gain strength where people are trying to find safety, which I find a bit strange. But I mean, do what you want to do. How high can we go? Well, I don't know, but 159, 160 is probably a good place before we have an immediate threat from Bank of Japan. I saw earlier someone discussing that Swissy has been very weak today, sending dollar Swiss much higher. And I saw a few hours ago the Swiss National Bank saying, well, we are worried about the moves in the Forex market. And after that, Swiss weakened considerably.
Very interesting.
We might have had an intervention this morning, actually.
Yeah, because they're also kind of interested in weakening their currency. Of course, the dollar Swiss franc on a, if you just take a look at like a monthly time frame, this thing has been strong against the dollar and strong against most major currencies for a very long time. So that's an interesting development there in terms of where all that could be going in terms of the Swiss franc. The Japanese yen, despite this, is not really getting much of a bid, Ivan. I thought that was kind of interesting. It's like dollar on top here for risk off currencies today.
And alone, well, until Swiss National Bank intervened into the Swiss, but yeah, and where, yeah, I would argue that that's kind of strange, but to me, I don't see Swiss as a safe haven anymore as much as I see gold, silver, dollar, and yen, because they never really get the same strength. Maybe we don't trust that the Swiss economy, which is currently quite weak, has the robustness to hold our most precious money. So if there was two continuation trades, I would probably say dollar Swiss and dollar yen on a pullback, but it's kind of like trying to find scraps in a buffet. It doesn't taste nice.
Yeah, and again, right now just goes to show when you do have that geopolitical or any sort of major risk-off environment, dollar is still definitely king in terms of that reserve status. Ivan, what do you think? This is
Yeah,
obviously an impossible question to answer. How
challenge.
probable do you think it is that we see continued escalation? Like you mentioned, $100 oil. How likely do you think that is? I know that obviously we are not experts on Iran and the circumstance in that part of the world, but just general market commentary. I made the point earlier that usually there's geopolitically when you see these huge, terrifying headlines. I don't know if you saw this, Ivan,
Mm.
but I was across my social media. It was like everybody was saying, I'm going to buy gold on the open and it's an easy trade. And I'm like, man, I know Ivan right now is rolling his eyes so hard, just like I am, because ain't no such thing as an easy trade. The market already knows that there is, we talked about this last week, front
Mm.
running this. We had gold and oil moving higher. And now you can kind of see from the open,
Already.
if you had bought the open, you're negative on gold, you're negative on oil, right? So, how likely do you think it is that we kind of get a reset and then follow through to the upside? Or do you think this is sort of a sell the news type of event?
So what I mentioned earlier, what I didn't recognize there was of risk. There was some um, some rockets or some missiles towards Cyprus, so that engages either Greece or UK
Mm,
into the situation. But by all purposes, the Strait of Hormuz is closed. Um, we have the key players are still going on their day. We don't have any new countries like Saudi Arabia, United Arab Emirates, Bahrain, Qatar engaging either. Russia hasn't engaged either, as far as I know, other than just condemning it. So to me, I don't see more escalation. Of course, that could be possible, but I don't see the. I don't. There has to be something new that has not already happened. And even if Iran strikes back, that's not an escalation. We already have that situation. So we need to maybe an escalation would be the N word. But I don't want to go there.
mm,
So but for me, oil has topped. I don't see any reasons for it to turn higher, um, unless you have a massive escalation. And remember, Russia in 2022 um, threatened Europe and the United States with a missile, with a nuclear warhead, and that made oil go to 128 or
mhm,
so,
mhm.
and very realistic threat as well. So I don't see much more.
I like the way that you put that though, with oil specifically, Ivan, because like, okay, if you are somebody who thinks that, like, if you're somebody who bought the open, first of all, I'm not trying to make you feel dumb or I'm not trying to tease you in any way. But I saw these posts all over the internet and people who are new to the stuff, they are like, oh, okay, yeah. So like we should just be buying gold on the open. And again, there's an expression in markets. There's no such thing as a free lunch in the markets. There's no free lunch. There's no easy money ever. And so if you think there is, you know, you're in for a rude awakening. And so what I mean by that is that again, smart money was already piling in with anticipation of this potentially happening. So when the market opens up on Sunday night and people start chasing it, they're like, oh yeah, it's going to keep going. It's like, you are very late to the party. You are showing up when they're already taking down the chairs and putting things up for the night. Like that is the equivalent of how, markets are very smart and people fall for, thinking there's an easy trade like that. The point that you made there that I thought was really good is that if you are making the bet that oil is going to rip higher in the next few days. Now, I think tentatively that geopolitically or macro wise, that there's a decent bid for oil that I think could play out over the next few months. That's generally my perspective. But if you are somebody who's buying calls for the end of the week on oil, you are effectively making the bet that some sort of way more intense headline is going to hit the wire in the next 24 hours. That's what you're saying. You're not saying everything that's happened is going to send oil higher. You're saying if you are long, if you are chasing calls, if you are, making a big bet, a leveraged bet on oil or gold or whatever right now with short-term expectations that it's going to go higher, you are making the bet that there is going to be some sort of more intense headline, not something that happened over the weekend, more intense this week. And that's why trading is hard, is because people are making the bet that they think oil and gold are going to keep going higher because of what they saw this weekend, when that's old data by the time you hit buy or sell.
And I'm also quite, well, there seems to be a theme of attacking another country over the weekend slash night or morning. But I'm also a bit glad that we didn't have to trade through this. Waking up was for me was 7:40 a.m. on a Saturday morning, and then you're like, Middle East is blowing up. That is a bit. It's a bit much,
Right.
to be trying to survive, and then we could probably have gone higher, because by the time market opens, we had kind of settled down and we have more clarity. But we've been there before. Unfortunately, we were here last year in June for the 12 days. US has killed top officials in Iran before. Unfortunately, we have seen attacks on Saudi Arabia's oil pipeline before, unfortunately, and on tankers. So it's not necessarily new. I saw that Qatar had closed down their LNG production. They supply, where were they supply? They supply Europe. They supply probably China. So that may as well send natural gas prices higher. But as I said previously, we have already closed this trade. So what else are you gonna? Are you gonna do?
Right.
There isn't anything, but that could rip through, and then everyone says this is going to have an economic impact, and we're going to see higher inflation. That's only if oil stays at this level for the next month or so.
Yes.
And generally, it's down within, depending, but let's say a week or a day to a week.
And again, I like I said earlier, I am personally long oil right now, but I'm trailing a stop on it because I'm very aware that a lot of times that's how these things resolve. A lot of times, by the time the crowd is now keen to, hey, everything is terrifying, they've priced everything so expensively that you get kind of a reset on it. So we'll see. But again, I'm not saying by any means that there is not the potential for further escalation. I don't claim to know that stuff. I'm just saying that a lot of expectations have already been priced into the market. And here is the 9:30 open. We see Nasdaq ripping higher here. That's a pretty massive candle from the lows of this morning. That's a 1.6% move.
Can I call the bottom?
Give us your call, Ivan. You're calling the bottom here on Nasdaq. But see, that's just the irony. That's how the markets part people with their money, is they very convincingly, everyone's like, World War III, this is terrible. And then, that's a bottom. It's like, I'm not saying, again, I don't know what's going to happen next with geopolitical events, but we've seen this happen so many times where everyone is terrified and that's the bottom. It's like, it's just crazy.
Yeah. And I said this yesterday. I don't know how much we're going to gap. I don't know how far down we're going to go. I believe we're going to be between 1 to 5% gap. But when everything is over, we're going to go risk on, as you said earlier as well yourself. And of course, it comes down to timing of when are we going to go risk higher. But kind of the most important part is not to freak out. Or somebody said, call this crazy. I'm sorry, this isn't crazy. This is normal day trading.
Alan says Ivan and the Nasdaq have a weird relationship. When Ivan comes on, it is in fact a bottom. Alan remembers that one stream where it was like literally a multi-month bottom that you were on there. It was like selling off every day before that. It's like you showed up and the market saw your pretty face and they were like, "Hey, let's buy the dip."
It was the bottom.
That was crazy. Yeah, so I guess we'll see how it all plays out. Ivan, I'm going to give you a little bit of time to go solo here and just take over, go through some more charts. Of course, guys, I want to reiterate that I'm not in any way saying I know that this is a bottoming pattern or anything like that. I'm just pointing out that geopolitically, a lot of people get very emotional about these events and they bet huge that it's going to continue just in time to realize that, hey, the market already has priced these things for the events that you are thinking are going to impact them. So being late to the party is a very dangerous thing in markets, and understanding, hey, am I late to the party, is the question you need to ask. It's not, are these things scary and catastrophic potential is there? The question is, does everybody know that already, or is it underpriced? And so right now, I would just make the bet, and that's been my stake here, is that I think that there's probably a good bit of this already priced into the market, and we'll see where it goes next. Anyways, VIX is up 13%, gold up 1.3, so you do have a bid, obviously, on risk off this morning, 6.35% for oil. Bitcoin, though, is up on the day, 0.8%, and Nasdaq's down only 0.5%. Day over day. That is kind of crazy. So last thing I'll say here before I get out of here, if you guys want to check out the Edge Finder, we are doing some trials right now. If you want to try it out for yourself, we'll drop a link here in the live stream chat to where you can check it out for yourself. And just here is a quick view on my side of what we are looking at. Oil is still getting that bullish reading from last week. Copper as well. Dollar, yen, Aussie dollars up there. And then on the flip side, just a quick look at some of the bearish case stuff. We have euro dollar and pound dollar, which I mentioned already. I'm out of pound dollar. Took profits on that this morning. Hit both my take profits on that, which is awesome. So if you want to join the Discord, if you want to get access to the Edge Finder, etc., head over to a1trading.com, explore the different services that we have. And of course, you can also hit up Ivan for some one-on-one coaching if that is something you're interested in on his YouTube channel. Ivan, you got the stream for a little bit, man. Nice speaking with you.
Thank you.
See you, man.
See you. The bottom that we're discussing earlier, 1663 back in April, about this time of day, and that's a good 48% to go, 8,000 points to go. So yeah, for those who are wondering and wanting to know, there it is. It's of course not financial advice. Of course, it's not. There's a bit of humor and a bit of fun, but also in a bit of seriousness that whatever you have. Okay, this is everything that I've said yesterday for those who were there. And it was a great meeting for the planning meeting in Discord. But whatever I say is all about what I've learned. And you can go to books and say, okay, you're supposed to risk God, dollar's supposed to rise, and S&P 500 stocks is supposed to go lower, as Nick pointed out in his comments yesterday. Yeah, that is supposed to be the answer. But we already knew at market open what had happened. And I just want to kind of reiterate, and I can go back to many times. I just want to explain this, that because the question for many is, when have we priced in the new event? And that market open, that gap from here to here, that is the pricing in. There isn't a week or a month. It's just in that micro, nano, millisecond that we gap up. That's the price. And then funnily enough, right, you would imagine what is that price? That was, I believe, to be, well, yeah, it was above, so it's way above our monthly target already for March. And generally they have gapped up at the target, and then I'm like, you're at the target. What do you do? What does your trading tell you? And your trading generally tells you, if you are target, you probably should get out. I don't know who said it earlier, but they said, I think they wanted to get out 74. Yeah, that is basically your number one duty as a trader. Now, me and setups. Are we bullish? 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 And are we bullish? And most of the end pairs, even regardless, so if you haven't seen the news today and you're just looking at technical analysis, and I said this yesterday as well, and I got some small pushback on it, but I got some question like, why? I said today is the only day of the year, probably the single day, maybe a few times more, that is technical analysis only thing that's going to give you guidance. I don't rely on technical analysis. I said fundamentals, seasonal sentiment, edge finder, for that moment when the market opens after such a risk event is no longer gonna be the main driver. The new driver is the risk event. Then we're gonna slowly fade out. How long does it take to fade? Depending. But I mean, we've had war in Ukraine now for 4 years, and it doesn't drive the market. I'm not going to say it's going to take 4 years, but it's a long time ago, and it takes, unfortunately, in this ruthless market, it takes not a long time before we are like, okay, what's next? And I mean, CPI is in 10 days or probably. So there it is. And then March is heavy on the central bank meetings. So what are you going to do about that? So me, I think this is going to be the top for oil. And doesn't mean that you're going to. That doesn't mean I want to buy or sell or close or enter or anything like that. But just for lessons and for understanding that that is the pricing of the event. Now we have to price in more, and I'm quite surprised that we haven't seen more reaction out of the natural gas market. Maybe it's the Asia pricing, probably then. Out of nat gas, where Qatar has closed down their production. But again, it's short term. Hormuz Strait, Iran says that the Republic of Iran said that they're not closing. They have not closed it. But of course, when they do, when 3 ships are on fire, what are you going to do? Of course, that shoots the insurance price through the roof, and maybe even the insurance company doesn't want to insure ships going through there, so you practically can't. So in that matter, I mean, yeah, that is the pricing in of that. And then what else can you do to make this one go higher? I have some thoughts in my head of what that could be. Um, but I don't see it as likely in this point. So current what we see and what we hear is what we have been given. So setups. Aussie yen. I wish I had the guts to buy there. Aussie dollar, Aussie, sorry, Australia. Uh, I am risk on. I am expecting this one to go higher. It's just that I want a deeper pullback, and market gave me that deeper pullback. I wanted a deeper pullback. And when we opened, it was a green candle, a few green candles. That potentially, as we saw in the euro, kind of didn't matter after all. We did rise, and then when we saw the news out of Cyprus and Lebanon, then it didn't really hold up. So to me, higher high, higher low. We're not breaking. We have not broken it. So I want to have a pullback. I want to see how this day kind of plays out, because I probably see for tomorrow, London Open. It's probably going to be a case. Euro yen has come back down to central pivot for this week, and for me, I didn't need higher high, higher low. And how that looks like will depend on where we open tomorrow, but something in this direction. Just continue the upside, and I don't discount, so I don't rule out that we're gonna fall. That could barely be that could like that's likely. That is one of the possibilities. For me, it's more, I heard Nick saying 60-40. Sorry, 55-45. To me, I'm more 70-30. Like I'm higher, more likely for this one to go higher, and more likely than likely that they're going to go higher rather than we're going to go lower. Any copper longs? Now, when it comes to copper and aluminum, I'm not too familiar with how they behave, and I'm quite surprised that the current price is that it's lower. So I'm just going to take the fact that it doesn't react as I would imagine it to be. So because to me this should have been bullish if for it to be how I normally see it reacts. But yeah, we're just reading comments. Yeah. So, I mean, in all fairness, to me, yen should weaken. Dollar can get stronger, but I am waiting for your dollar to go higher, high, higher, low. Why? This is the move. This is the world. This is the pricing in, and I'm just waiting technically for this one to turn around. And I know it's against my fundamentals, against EF, it's against everything. But then also, it's a military invasion. It's also against everything. So a bit of kind of, not necessarily summarize, but what happened today has been that Qatar has closed down their gas production. Strait of Hormuz is closed. Iran continues, and Israel and US and continues to launch at each other. And they have included now Cyprus, or Iran Iran with their proxies tried to hit Cyprus. That is NATO. So if that kind of becomes a thing where Greece needs to enter and help out, and UK has a large military base there, that might send this one lower because that involves Europe. For today, pound has been exceptionally strong. Congratulations for Nick on getting the short out of it. To me, I just need this. I just need a higher high, higher low at this point. But the risk is immense. So not immense, but larger than normal. So I need to use a 10th of a normal lot size. So if my norm was 0.1%, sorry, if my norm was 1%, which it is not 0.5, then I should be down to somewhere below 0.0, yeah, 5 probably, and above percent. So we are getting quite small lot sizes here. One is that I need to have a stop loss more than 100 pips and below here. Secondly, I need to be able to survive any other new impulses that comes in. And as we start to climb out of this, as we start to climb out, I would add. So the first entry isn't really that matter. It's just what happens continuously. Does yen get more strength in a risk-off environment? Yes, but in this situation, they are the weakening part because they are. I haven't really understood why, but the strength seems to go to America and oil. Well, because this would send inflation, generally speaking, in Japan higher because they are 100% importing oil. With a higher oil price, it should hurt them. So maybe that's where the deal is. Does a lot of missiles hit Tel Aviv, and does Iran continue to pound them as we speak? As far as I know, they go in pulse. They go in, yeah, they go in rounds. I don't know at the moment, but I've seen that they have continued to do so. Dollar is strongest, Swiss is weakest. Yeah, that that sounds about it, because also Swiss National Bank interfered seem to be in the Swiss, and I'm not going to call the top here either, but I am very cautious about one. This is a range. We all know range and mean. This could potentially fall higher, rise higher, but to me, the move has already happened. So if I were to be in it, I should have been in it down here. And right now, it's kind of more left to chance and not necessarily probabilities and longer term things. This is FXCM, yeah. There has been some problems with FXCM since open yesterday. We haven't been given data from them, so yeah, this is So I need to go to use Wanda, but to me, New Zealand again hasn't really moved that much, and if it turns around higher, in the event it turns higher, I am also likely to look for a pullback and a continuation with it in the coming days. I hope to see that happening London tomorrow, London Open tomorrow, and that means that throughout New York slash Asia, we need to break higher above 59.65 and set everything else into perspective. Bitcoin hasn't really fallen that much. The asset that sees more volatility than we see assets. It's sometimes astronomical how volatile it could be. Again, 50%. I thought it would have got down to 50 on the open when I thought about what could the implication be to crypto. But as you can see, it went from 65 to 63, and then that's that. And when it comes to risk events, which this is, I really want you guys to be, and I hope I've trained you guys, of those who are listening to me over time, is you do these risk events and you take notes every single time. Then you, for that matter, you do a replay, a minute, ticket for ticket, in news for news, so that next time, not that specific, but what drove it, what kind of news comes out, because we're still going to continue to hear bombardments and missiles and strikes, and see what that does to the market. Give yourself a feeling of how that impacts the market, so that it doesn't drive you emotionally. And if this was me 10 years ago, I would have bought oil by now. I would have bought gold by now, which is already down on the day, or coming closer to down on the day at least. And oil, I would have been, well, where it could have been somewhere here. So that would have been break even ish, and even the top upside of that trade isn't great at all. S&P 500 is now bouncing back, and Nasdaq is now bouncing back. And in the grand scheme of things, as you can see in the volatility world, isn't really great. And when it comes down to VIX, is already falling down to 21, and it gapped up to 24 and high of 25. So, I mean, there is everything is normal. Everything is going back to normal. So for tomorrow, that is Uganda. For tomorrow, I am waiting for new higher high, higher low on euro, and I'm waiting for a new higher high, higher low on pound, new higher high, higher low in New Zealand, though that's a bit of a more of a mystery one, but still. I'm waiting for new higher high, higher low on Aussie yen. I'm waiting for new higher high, higher low on euro, yen. I'm waiting for a new higher high, higher low on pound yen. And that should probably be 21.50. No, 210.50 probably. Like, we need to have a serious pullback for that to happen, because that is too high. And New Zealand yen, yeah, new higher high, higher low. What about pivot points this week and targets? It probably could be that we do stop in bullish targets this week, and that, yeah, I'll just follow the normal rules by taking profit there. Market is likely to continue beyond targets this week, though, so that's again question of how can we get out of that. And how I normally deal with that is I have two orders on, split it in half, and take one at actual target and one and half of the order, half of the trade, sorry. Let it go and see how far we can go. And if we go back to 2025, New Zealand yen did rise higher at the end of the day, but hit, I think, was it even bullish weekly at the end of the day? No, didn't even. So just, play smart if it makes new lows. If, for that matter, euro yen makes low below 183 for some reason, then be cautious. Do you place your stop loss on a structure? If I were to take a trade, generally speaking, like here, if that, I would want to be below here, so anywhere below previous structure. If I were to trade here, anywhere below that, so previous higher low in a bullish. So yeah, that's me. So if you want to hear more from me, you can go over to my YouTube channel. If you need help with your trading, you can reach out to me, and I really love, and that's kind of what I'm here in this world, is to help other traders become better traders. That's something that I never had myself. All right, I see you next time, and boom.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, good afternoon, everyone, wherever you guys are at. I hope you guys can hear me okay. It has been a while, and I am so happy to be back here with you guys. I took a week off, essentially, and as you can see, I'm in a different location here. I moved from Chicago to a different state here, so I was getting that sorted. And what a good time to come back is when we have, well, not a good time, but a time to come back when things are really moving here. So I'm happy to go ahead and just cover the markets the way I see it. It's pretty much in line with a lot of people that the previous guests that we've had on here for today. But we can see, as we all know, right, the big mover here today or over the weekend was oil. And I just placed the two charts here for the day on the Telegram channel. One of them was oil. And I like the way Nick articulated it. The idea of oil moving higher, right? With anything, markets are extremely efficient, right? They're very smart. And so essentially this peak of oil that we have so far on the day is pretty much priced in the worst case scenario. So you would need to see something brand new, fresh, just as bad to go ahead and push oil higher. And so I'm sure, as you get into these 75, 74 handle, right off the open, oil became a very crowded trade, and that becomes very, very dangerous. But yeah, that's pretty much my thoughts there on oil. Very summed up very quickly. The price action and the forecasting beyond that 75 handle, I think you would need something just as bad to go ahead and happen. The question, what that would look like is, is this thing going to be prolonged for a very, very long time? I think that's the question on everyone's mind at the moment. The recent pricing in right here just kind of showcases like what's currently happened, which is the Strait of Hormuz is closed off. You have insurance premiums for these oil tankers that were skyrocketing there, so there was no movement there. And that controls 20 to 25%, almost 20 million barrels per day of oil gets moved through that area. So that's kind of what we're pricing in now. There's a domino effect that comes with that. So if you were to see oil being like nothing passes through that, then you can definitely see a domino effect that would cause the dollar to go higher, yields to go higher, liquidity tightens a little bit, inflation, right? The Fed has to go ahead and hold back on interest rates. I saw something interesting too today. I think it was Fed rate odds were pushed to September. So let's see. I didn't verify that, but I did see that on an article as I was reading today. Let's see probabilities for the CME. No, it's still okay. So it was June. Now the best case scenario is July, and then beyond that. So interest rate cuts were pushed back a little bit there. And if you continue to see oil stay elevated and global inflation ticks up, then you can definitely see yields rise across the board. Dollar index will benefit from that, of course, and chug higher there. So I'm in two positions at the moment. I'm in euro dollar short. And you do have dollar CAD long there. Euro dollar short, I got in right around here in this area. And now we're, in some profit there. I was in this for a couple of reasons. I was just betting on dollar strength, right? We did see the fundamental backdrop for the dollar improve. At the time, the Edge Finder did have a bearish reading on the euro dollar here. It's still a bearish reading there. So that was kind of my reasoning for getting into the short. Now, obviously, the thing happened over the weekend and the dollar caught a safe haven bid. And so now you're seeing this trade lower. How I manage this position, right? Trailing stops. I said this in the Telegram channel last night, right? When you get these big moves that happen really, really fast, do not get greedy, trail your stops, right? Because the world desperately, I think anyone can agree that there should be no war, right? So the world desperately wants for a resolution, and any sign of that will cause a repricing, right? A corrective repricing. How much that is, well, we don't know, right? Depending on the headline and the development and things like that. So I always say trail stop. So I'm going to trail this thing, as it goes lower. However, this 200-day moving average interests me. Also, this 1600, this 1.1600 level interests me as well. Now, this is a little bit tricky, but I do plan to eventually fade this move that we've had, right? I still don't know what that would look like. You would need some kind of headline suggesting that everything is coming down to a resolution, maybe a ceasefire from both ends. I would much rather just not catch the bottom, but just be on the right side of things. So as long as we see kind of a V-shaped bottom formation and some continuation with some good headlines and things like that, then I'll be looking to go ahead and fade this recent, strength on the dollar. But for now, the kind of the bias, the easy trade, as you will, which there's no easy trade, but the obvious trade, if you will, is, dollar yields, all that safe havens upside, right? Until we see that, nothing really changes. Let's see. Alan, look at the USD new figs are big. Yeah, I did see, what was it? It was ISM or something like that. ISM manufacturing came in well. So ISM manufacturing came in well. I think we saw something earlier. No, that was the UK. But yeah, I mean, figures I would say this. I don't think the ISM manufacturing will hold much weight here in the near term. I think the bigger focus is what's going on over there. But you did see a little bit of a revival here in the Nasdaq. As Ivan hops into the stream, that's kind of a good indicator that this thing's going to flip a little bit. But you are seeing this thing just rip higher there. So Nasdaq was at one point down 1.8%. And I was kind of curious to see if there was going to be some dip buyers ultimately right here at this 24,000 level, somewhere around there. where you have that 200-day moving average was where I was going to look up for the Nasdaq there. But we'll see. This thing could easily reject this level and continue lower, but it seems like we are getting some kind of a dip buyer activity. S&P 500 as well, 6,800 to 6,700 handle, somewhere around here. This level of support that I have on my chart seems like the buyers did go ahead and buy in there. The VIX too is kind of fading off a little bit, so it kind of does resonate with that move there, which is interesting to see. So we'll see if this is an easy fade, but for now, I'm gonna wait and be patient because I haven't really seen anything significant that's brand new. Hey, ball out. Yeah, Ivan. Yeah, he did cash the bottom. Hopefully, he participated. Silver. Yeah, silver. Let's see how silver's reacting. Silver, I don't know. Silver. When it comes to the havens, I would much rather gold versus silver. So silver was memeified, more than gold there, and so it is catching a slight bid there, but it is down 3.4% versus gold, which gold is kind of creeping up to those all-time highs there. So yeah. I feel bad for anyone that bought gold immediately after the market opened. I did see a lot on social media that the method was to buy a bunch of prop firm accounts and full port gold on long to the open. Clearly, that's not working out. So, yeah, I would say don't chase price. If you were in the trade beforehand, fantastic. You got lucky or whatever the case may be, but don't chase it after this because, like I said earlier, it would need something brand new just as bad to go ahead and allow this thing to rip higher there. So my thoughts on gold, silver, Bitcoin is kind of doing. I'm not really like paying attention to Bitcoin. Bitcoin is still just trading ugly here below 70,000. So yeah, nothing too crazy there. Oil, they have this big red candle here. We'll see if this continues to fade off. Maybe what you can see. Similar price action to what happened last time, but you probably get a pop in oil. It trades back into this level here, and then it just kind of stays elevated here, waiting for some kind of resolution or an escalation, right? So that's most likely what's going to happen with oil is that you'll probably see buyers or sellers just kind of mean revert back over here to this breakout level, this initial one, and just waiting for a new catalyst or new news there. Let's see. We've seen gold out percent silver for the first time in a while, so I expect to see that continue. Yeah, it was funny seeing people buy at the open. Yeah, that was expected, of course. Definitely expected. I would say, yeah, because they FOMO. I would say like the best way to survive something like this is just use lower size and wider stop losses. That's the way to go, in my opinion. That's how you survive these very, very, very volatile news. But as far as catching the fade, right, what I would look to do for that, I would use a couple tools, right? We'll use the edge finder as far as positioning goes. So this is kind of, what I'm thinking of. You would look at COT data to see if money is shifting a certain way or not. I would also use, as far as sentiment goes, I would use like the put to call ratio if I'm looking to time a bottom on like equities and stuff like that. Definitely something I would, go ahead and use. But let's just go ahead and look at the top setups here. I assume nothing much has, let's see. Oh yeah, Aussies. Well, Aussie Swiss here is getting a very bullish reading. But from my understanding, this thing did go ahead and fall low. Oh, wow. Look at that. Aussie Swiss getting a very bullish reading there. I did see pre-market on Sunday that it was down 1.1%. And now look at that. It has pretty much retraced this whole move there. So that is very, very interesting. Good job, Edge Finder, on that. Getting a very bullish reading there. Was late to that one. Let's go ahead and look at majors only here. We see, yeah, so the dollar basket is getting a bid there. Dollar CAD on the fence there a little bit, but you are seeing pound and euro getting crushed there. Another cool thing too, guys, for my futures traders out there. So you can trade currencies in futures as well. You can do like 6E, which is the euro, 6J, which is the yen. This is essentially the edge finder getting like the dollar index and all that good stuff. These currencies isolated as a single like asset here on the top status page. So brand new feature on the edge finder there. You can see these like futures currencies there. You can see how they're performing, right? So I love to see like this Canadian dollar getting a bearish reading there because I'm long dollar CAD. So good for my position there. So Definitely, guys, get yourself a copy of the Edge Finder. I don't know if there's a sale at the moment, but you can definitely get a trial there, and definitely go ahead and participate also too. In this time where we have lots of things going on, I will definitely update you on the Telegram channel for free. So go ahead and join that. The link is there in the chat there. Super cool to see. Now we have Twitch and Kick. And well, we've always had Facebook there, but that's so cool to see. That Kick is where all the cool kids are at nowadays, I think. So it's really, really cool to see that we are on that platform as well. We do have my friend Marco here in the chat. I'm very happy to speak with him here shortly as he comes on to kind of get his thoughts on how things are going.
Hello.
Hey, Marco.
Can you hear me all right?
Oh, yeah. Yeah.
Awesome. So you have a different background.
I have a different background. I'm in a totally different home now.
Okay, cool.
I was moving across the country, so it took a little bit of time and effort there, but I now have a more space, so I have built like a proper studio now.
Cool. Yeah, we missed you last week, but you were moving.
Yeah. Well, cool. I'm happy to be back, man, and
Yep.
coming back at a very volatile time, so I'm happy to be here for sure.
Yeah, crazy time. Did you already break down the whole situation? I believe you did.
A little bit of it. There was some stats that I wanted to go over, but essentially, right, I'm sure the guest before me did, but the big reason behind this whole move was oil, right? Oil, risk off move. And so you see the dollar and all that good stuff moving really heavily there. But I was really kind of going more into like fading it, right? Like what that would look like. Did you place any trades, or were you already positioned for this, or positions that kind of like were affected by this?
So I made a mistake. I had a gold position on my funded accounts, a gold long position, and I closed it on Friday.
Come on,
So
Marco.
I closed it right there for like a 1% gain. Reasoning was China was coming back online from the new year, but there wasn't much activity if you looked at the Asia session. And the tax refunds in the US didn't really go into the gold market as much as I expected. So I closed it, but I should have sort of anticipated the risk-off scenario. And they should have seen that the US is moving a massive fleet over to Iran, and that the US is evacuating personnel out of neighboring countries. So my mistake this time. But I also do have a position on the Nikkei, which is a risk-on position, which is right now running at around 3%, something like that. Trailed the stop loss at 56944, pretty close to being taken out, but again, pretty happy with this position if it ends up being a profit. I'm looking at gold. I'm looking at oil. Oil, of course, gapping up like crazy. I think the opportunity is gone. If you didn't participate last week, I don't think catching the price or getting in now is a smart move. But gold, if it pulls back a bit to the 20 EMA, I think it could be game on, and I think it could be a sort of a pretty nice asset to trade. And I'm looking at the euro dollar as well, which is something that I've recently added to the list, which you may like because I know you had a position on EU. Do you still have it?
Yes, I still have it. Yes.
Awesome. So we know that the Strait of Hormuz is a massive sort of point where a lot of oil goes to Europe. Let's say one of the places is Europe. So Europe gets a lot of oil from that part. Iran has closed off that part and is only letting Russian and Chinese oil tankers pass. So essentially, EU is now facing a supply issue with oil, which means oil prices go up, which means it's gonna take more euros to buy oil, and it kind of creates less confidence in Europe as well. All of that turns out to be bearish for the euro. On top of all of that, you have the dollar, which is usually a safe haven asset when there's a war. So perfect scenario, just sell the euro dollar. How are you doing on that position?
I'm doing
Is it now
good.
moved quite far, or?
Yeah, it's quite far. I'm looking to go ahead
Mhm.
and look to take profit somewhere around this 200-day moving average or this 1.16. But you touched on it very, very well. The euro's getting hit from a lot of different sides, right? You got from a domestic standpoint, they were coming out of stagnation, and now with this oil thing going on, like you said, Europe is a big benefactor of that route, right? That oil
Yep.
production. So that
Yep.
could go ahead and spike inflation, which some would say, well, that's good, right? Good for the euro. However, that can go ahead and trickle into slowing growth down. So that's that pressure point for the euro dollar as well. Then you add in that the fact that the dollar is actually catching a bid against everything else. So that's another layer of added pressure for the euro dollar. So that's
Yep.
kind of where they're at. I did see something on Financial Juice. I think it was Lagarde that said this morning because I think she spoke.
She woke up.
I think she woke up. I think they had to rush her in there. I know it was you don't disrupt the Europeans when they're
Yeah,
working on the
work-life
weekend.
balance. You don't mess with that. So
I saw
I'm
lots
glad
of stuff about
they
that.
got her up and into the office. I'm glad. So
That's hilarious. I did see lots of memes about that, but she did say, or someone on the policy front did say that they're ready to act on interest rates, right? But
uh-huh.
again, the euro's definitely getting pressured, so that's why you're seeing this one fall off more than you would like an Aussie dollar or Kiwi dollar. Well, not Kiwi dollar, but Aussie dollar, which is a risk currency, right?
Yep.
So that's the thing that's going on with the euro. So I'm happy with it. I got in this for different reasons, of course. Before the edge finder was getting a bearish reading on it, just because the U.S. was kind of improving there on the labor data front and stuff like that. But yeah, I mean, if things continue to rise, like you do have global inflation, inflation for the euro will be bad, but inflation for like the U.S. would just cause us to hold rates higher. I have a stat, and I heard about this from Kathy Lean, Forex macro queen. She did say for every $10 of oil that is elevated, that adds about 20 basis points to CPI. So if you see this
Okay.
thing elevated higher for longer, you will see probably CPI figures start to come in a little bit hotter, and that's why you kind of see the Fed pushing those rate cuts a little bit back into like July, September-ish.
That is super interesting. And yeah, one thing that you mentioned that I forgot to mention is the higher oil prices may cause the economy in EU to slow down, which then forces the ECB to cut rates, which is bearish for the euro. So yeah, but it's interesting that the Fed has moved the goalpost of rate cuts because that could have an impact on pretty much all of the markets. One thing though that I don't really understand today is the S&P, which is pretty much break even. I mean, we
Break even,
definitely
yeah.
gapped lower, but now we have recovered. Nasdaq pretty much the same. So looks like the risk-off scenario is not really impacting the stock market much. I know when the Ukraine and Russia war escalated back in 2022, I can quickly bring that up. Let's go to March, let's say. It was the signal of the top. So right here was when the conflict started, and it was a massive top. But then also on some occasions, a war can actually make the stock market rally. So it all depends on, I guess, who is in the conflict and what is happening. Yes, there's an initial drop, but then later down the line, the S&P and the Nas tend to gain value. But especially the dollar. I mean, the dollar is always a safe haven when they attack someone. When the
Right.
US attacks someone.
Yeah. When the U.S. is involved, obviously that world superpower kind of takes effect, and that's why you see the dollar catch a bid there, which is interesting because you're seeing it really, really gain some strength against the yen and the Swiss franc. So at first, the severity of the risk off move was going to be determined. In my personal opinion, I said this in the Telegram yesterday. If you see like Swiss outperform, then that's like a true flight to safety there. But if it seems like the dollar is catching some strength, and maybe that's why you see the Nasdaq and equities doing well. We did see some manufacturing numbers come out today. Good. I don't know if that has anything to do with it. I doubt it, just because I think most attention is to this year. But we'll see. I think it's a little early to tell if this thing continues or not. I would like to see how this thing performs maybe 2-3 days out, because this can definitely be just another pullback before this thing fades lower. I don't know, like since coming on the stream and this morning, I haven't paid too much attention from headlines on that side of the world. Has things been escalated, or is there more missiles and ships being taken down? I know the U.S. took down maybe a couple naval ships from them and stuff, but
Mm-hmm.
don't know if things have continued to escalate or not.
I know a big issue. I've been doing too much watching of Twitter, but the main issue is all of the countries, the neighboring countries, are getting attacked as well. Essentially, they're targeting the US bases, but the rockets are flying absolutely everywhere. So those countries do have systems to counter the rockets, but the supply is running out fast. So it's not really about the money, it's about the supply of the rockets that are supposed to counter Iran's rockets. And to build those rockets, it takes months, maybe even years. So once, for example, the UAE or Dubai runs out of the counter, the systems to counter the rockets will actually start flying into the city, into Dubai, which may then cause a boots on the ground conflict where the neighboring countries actually attack Iran, and maybe the US puts boots on the ground on Iran. That would be a possible sort of escalation. But we may also have a new leadership in Iran, and they may try to do a deal with Trump. You never know. What I'm personally guessing is this is going to be another sort of forever war where things just drag on and continue for, I don't know, 5, 6, 7 years. Same thing that happened with Vietnam, Iraq, Afghanistan. It's like just a repeat of history. And the main issue is that Iran has so many mountainous areas. So it has a bunch of mountains, which means it's impossible to invade with boots on the ground because Iranians hide in those mountains, in the bunkers, and it's extremely hard to drag them out. And there's always going to be guerrilla warfare where they just pop out of a mountain, do some stuff, and then retreat back into it. So I don't like the situation at all. I think it's going to be a longer one. So I'm trying to position myself that way. I'm trying to buy gold, absolutely. Oil, possibly, on pullbacks. And pretty much buy the dollar as well. That's something I'm watching. So I'm watching gold buys, oil buys on pullbacks, and selling the euro dollar in this particular example. But what do you think?
Well, I'm with you there. I do wish that as a human being that it stops, right? But we'll see how long it actually takes over. I do like the idea of, in the world that we live in, there seems to be always some kind of geopolitical conflict or uncertainty of something. National debts keep rising. Central banks are easing rates. So I do like the idea of accumulating gold. I would like for a pullback of some sort. Now, how deep the pullback is, I don't know, right? I think accumulating smartly, like at 5,100, if we get there, 4,700. Now, obviously, that is some ways to go, especially in the times that we are in right now. But I'm with you there that I do think that gold will continue to drift higher there. And it's smart to start accumulating. The tricky part is when do you buy it, or where do you, not, or how much of so do you buy it? But I do like the idea of dollar long as well. I think that we do have some room all the way up into this 100 to 100.5. I've kind of been a long dollar bull cautiously and somewhat actively for some time now. So I'm happy that it's working out here. We are, closing above. If this candle closes above this 200-day and 50-day moving average, then most likely than not, you will kind of drift higher into this area until you see a change of direction when it comes to the conflict. So I'm with you on that front as well. I'm going to just continue holding my positions that I have at the moment. Euro dollar shorts, dollar CAD long there. I did get like pullback. I was pretty much close to break even, but we've since traded higher there on dollar CAD as well. So happy to see that. So I'm going to stay on that front. If I do fade this position, if we see a resolution of some kind and we go back to the fundamentals that were driving the market previously, I'm happy to participate by buying the Aussie dollar, maybe buy some equities, or shorting. Like this was a good one here, a good chart here. Dollar Swiss. I've been waiting for this thing to get up into this level here, the 7,900 level. If I'm going to be a contrarian and we start to see it makes sense for that trade to take out, shorting dollar Swiss at this level here, right? We had this was once, I'll illustrate this for you guys, super easy. This was one support, right? It bounced off of here like 6 times, 1, 2, 3, 4, 5 times. and then it broke, right? So I'm looking for this to turn into resistance. So if we got to trade up into these moving averages, I'll be happy to go ahead and short dollar Swiss if I'm going to take the contrarian play. If we start to see things ease, central banks are now easing rates. The Fed is, now looking to ease rates again. That would be the trade for me. But for now, I'm going to stay with my current position and just trail stops and ride it out until it's no longer the trade at the moment.
Yeah. Can you quickly walk me through the mechanics behind? I think you're doing a long USD CAD. So how does that play into the rising oil prices? Shouldn't the CAD catch a bid?
Yes. So right now the dollar seems to be overriding that. At the time, if you remember, like when I was going long dollar CAD, the oil was right here, and I was actually doing the opposite. So oil was right around here, and I was basically betting that things are going to de-escalate. Obviously, we didn't get that. Now at the moment here, the dollar is overriding that move there. But yeah, I mean, I like to see that the relative strength with the dollar CAD is still holding up, given that oil prices are elevated here. So, as long as that continues to happen, I'm going to stay in the trade. Most likely, I'm just going to turn this into a break even and then let it ride out. But yeah, that's kind of my thought process was actually the opposite. I was actually looking for things to de-escalate, and I was betting on oil going lower. But, to my surprise, and that's the funny thing about markets is the correlations are not always there. Like especially with the equities, right? You see this risk off move, but you see equities not doing too bad, right? So
doing pretty well.
Yeah.
Interesting. Yeah. So I think dollar strength can definitely follow through and then pull you out of USD CAD. And I like the positions, especially euro dollar. From which level are you in on EU?
1.8523. So that's gonna. I did have it here, but basically this is where I'm at right here. Like somewhere right 1.85.
Awesome. That's a pretty good level.
Somewhere like right here. Yep.
Nice. Yeah, that's
so
a pretty
yeah.
good play.
I'll continue to trail it and let it do its thing. I'm happy with it though. I will say it was a little bit of luck because this was unexpected. So initially I was looking to go ahead and exit right here at the 200-day moving average or even sooner. But now, with things that are going on, it can definitely continue running. And so this 1.1600 level coincides a little bit. If you look at the euro dollar next to the dollar index, that kind of looks like the this 99,500 level right here. So we'll see what happens if we get there.
Yeah, as they say, luck is where preparation meets opportunity. So
yeah,
there's always a reason for something and for the moves. But you're not looking to exit preemptively on euro dollar. You're looking to ride it with a trailing stop loss. If I got you right. Okay.
Yes.
Cool. Yeah, for me, just looking at EU here, we already made the move, but if the ECB decides to cut rates, decides to become dovish, and if the dollar continues to catch a bid, so essentially if this conflict gets prolonged, which I believe is going to happen, looking at the 20 MA, maybe the 20 MA goes down a bit, and then I can catch a bit of a rally or sell the rally. That would be a fine game plan, in my opinion. Just to look at the euro dollar on the Edge Finder, bearish reading. So that's awesome. We're getting a bearish reading. May even make sense for me to enter prematurely because have you been looking at the pound Aussie maybe?
Pound Aussie, I have not. I don't really trade the miners too much. It has to be a very obvious one. I mean, I know the pound Aussie has been a very popular trade within the community. It was having a very bearish reading there. But I mean, look at that thing fall right off a cliff right there. Yeah. Are you looking to trade? Are you in the trade?
I was looking for rallies. So the game plan was to sell rallies on the daily chart, but a rally never happened. We just melted lower. So
gotcha.
That was one of the examples where I was a bit too late to enter. So to avoid the same thing happening on the euro dollar, I'm thinking of just getting in on a small kind of a feeler position just to be in. And then if it melts, I'll still make profit. But if it does rally, I can get in on another position, let's say 0.5% on the first one, and another 0.5% on the second one. So that is my game plan. And are you looking to enter something new except dollar Swiss?
No, I'm pretty happy actually with
Okay,
what I
cool.
see. Unless you see, so one of the things that I mentioned before is like the world desperately wants some kind of resolution. So the only way I would really add on to new positions is by if I'm looking to fade anything, and that would mean me closing out these long dollar positions and kind of flip positionings there. But for now, I'm happy with it. I'm gonna trail until it continues to go. And that's pretty much going to be my game plan. As far as adding to the position, I don't know, because then I just don't want to make my average fill price unattractive, right? I don't want to push it lower here,
Mm-hmm.
because then you do have the risk of corrective pricing happening. If a positive headline comes out, you will definitely see a lot of like zigzags really, really fast.
Yeah.
So I want to keep that attractive price that I have pretty up there. So I'm just going to keep my current positioning on. I'm happy with it. It's 1% on euro dollar and 1% on dollar CAD. So 2% I'm in the account. So I'm okay with it. I'm happy with it. If this thing continues to drop, it's still going to be a very good profit for me. So
Absolutely.
I'm not going to try and force anything, though it would be nice. It would be nice. But if anything changes too from like a technical structure or anything like that, where it makes sense for me to do it, then I would definitely like, inform the audience and all about that. But for now, I'm going to keep it how it is.
And so with the war and everything, how is it being presented to you guys over there? I know how it's presented in Europe, but in the States, is it presented as something that's going to be over quick? Or is there a commitment to kind of prolong the conflict, maybe make it last for a while? Because in Europe, there's a lot of negativity around it, as far as I can see on the news. But I was wondering how it is in the States.
Yeah, that's a good question. I don't think it's the case that they're looking to prolong it. Like, I don't think anyone wants to prolong it.
Yeah, absolutely.
To be honest, I
Yeah.
don't really watch like the mainstream news, to be honest with you. Like, most of my news I get from either like a Wall Street Journal notification or Financial Juice, like more financial specific stuff. But no, I haven't really seen anything crazy, to be honest with you. But I definitely don't think that it's in anyone's best interest, or like any normal person would want for it to continue. Yeah,
of course. Maybe I should have rephrased it. Like, are people ready for a longer conflict, or will there be a lot of, let's say, negative PR? I know there's midterms coming up soon. So if the war is prolonged, will there be a lot of pushback? That was my question, actually.
I would think so. Like my fiance, I was telling her about it. She gets very anxious and she was very scared and stuff. And I was like, look, since you were born, we've been in war. So like, as far as like things happening to us, it's probably very minimal. So yeah. No, I think things are pretty calm, okay, from what I'm seeing, from my perspective.
Yep.
But again, I do come like from a very privileged position. I'm in the States. I'm in a very safe place. So that's just that.
Yeah, I know midterms are like the next big thing that people in the States are watching and looking at. Will Trump bring a win, or will he actually lose? Because I think 80 or 90% of midterms, the structure changes. So usually the president wins and his party wins as well, a lot of seats. But then on midterms, his party most of the time loses seats, and then he has less power, as far as I understood. But I just have read some posts.
No, that's definitely correct. Midterms are very, very important. But yeah, Marco, I know I did run a little bit into your segment here, and I want to give you an opportunity to go into your, because we do have Mr. Tiger Berry, I believe, coming on after you. So I will leave you with that, Marco. I think we're going to be streaming all week today together. So I'm very happy with that.
Absolutely.
Join the Telegram channel, guys. I'll put the link there one more time, and get yourself a copy of the Edge Finder if you want to navigate this market super, super safely and with confidence. Marco, I will see you again, my friend.
Yeah, thank you, Alan, and see you tomorrow, I believe.
Yes. All right. Bye-bye, man.
Goodbye. So that was a really good conversation. I'm looking forward to tomorrow when we can continue some of these topics. The main question right now is, I would say, of course, the Iran conflict and those midterms that I just mentioned. I know Trump is definitely looking at them, and he wants to grab some political points before the midterms happen. So that could be another narrative, that could be another catalyst to move the markets in one way or the other. One thing that is going in favor for Trump is absolutely the stock market, which is holding up really well. I didn't expect this. To be honest, I was expecting a gap of 1 to 2%, which didn't really happen. And we're now pretty much at break even on as far as the stock market goes. And one thing that we do know is Trump uses the stock market as a scorecard, essentially. So if the stock market is doing well, it means he is doing well. In his head, he means or he expects his popularity to be high. So to briefly run you through my watch list, actually, before I do that, we have the challenge giveaway. So let me just see as far as the codes go. In the comment section, I have posted the link to the form. Fill out the form and you will get entered into a DNA giveaway. Okay, let me see which kind of account I have for today. Let's see, files. Okay, it's a 10K one phase account. So 10K one phase account. Form is in the comments. Open it, fill it out. I'll have all of your names. I'll put the names into the wheel of names and we will pick a winner. So now it's time for the watch list. Essentially, I have the Nikkei. I'm trailing my stop loss. Most likely I'll get taken out. Current price is pretty close to the stop loss. Really happy with this position. Gold, I had a position on my fund accounts where I tend to be more aggressive, more active, and I tend to take more positions. Closed it on Friday. Wasn't the best decision because if I held it, I would be running some decent percentage. Part of the game. So I'm flat as far as gold goes. I would love to get in. If I'm looking at the top setups and I search up gold, neutral reading on gold. Okay. But if we go bullish, if we go to the 20 MA, pretty much game on for me to get in. Oil went up like crazy. By the way, if you're wondering how to get weekend prices on oil, you can go to IG weekend oil and you're going to get the rough price. Okay, you're going to get the rough price of oil. This is the 5 minute. No, we need the daily chart. You're going to get the rough price of oil over the weekend, and it's pretty much accurate, really accurate. So that's something I recommend you check out. As far as the game plan goes, I want to get in. As I told you before, I think this conflict is going to be a prolonged one. I think it's going to be another forever war started by the United States. Vietnam, Iraq, Afghanistan, Korea. I'm not sure what happened in Korea. It was too long ago, but that didn't go so well either. Yeah, that's just the reality. Each time the US goes in, they want to do a quick operation. It ends up lasting for 5, 6, 7 years. As traders, we need to adjust. And the consequence of a prolonged forever war is higher gold, higher oil, dollar higher as well, bullish dollar, and of course, not so bullish stocks. Okay, not so bullish stocks. Alan says, forgot to talk about USD JPY. That is correct. So I can briefly bring it up here, USD JPY. Okay, love to see this. I think the intervention zone is still in play. I'm still looking at this level. I don't have an alert, but I probably should have an alert. So let's put an alert here. Just as a refresher for people that don't know, the 160 to 161, 162 level, those get heavily defended by the Bank of Japan. So the Bank of Japan loves to manipulate the interest rate. They love to do interventions. Last time they did a big intervention was in July of 2024. What is the trade? The trade is sell USD JPY when we hit this level. because it's very likely that we're gonna get an intervention. Let me just check if I've ran into Tiger's segment. Just let me check the schedule. Oh, looks like I have. Sorry, Tiger. Let me just quickly do the giveaway. So give me just 2 minutes, and then we're gonna switch off to the next show host. Today is the 2nd of March. Okay, 2nd of March. We have the names. Let's bring up the wheel. Spin. Okay. Nick Hill. Yeah, looks like Nick Hill is the winner. After my segment, you can expect an email from me. Congratulations, you just won a 10K one-phase DNA challenge. If you want to get funded, don't forget you have the discount code A1Live, which gets you 25% off any DNA funded challenge. Okay, so A1Live, 25% off any challenge. This is my personal challenge right here, 25K one-phase account. I'm up 3.38%. Yeah, sorry, Tiger, about going into your segment. Just a quick recap on the watch lists. So Nikkei, I'm in a position. Gold, I'm looking for pullbacks. Oil, I'm looking for pullbacks. Euro dollar, I'm looking to sell on rallies. So I want to get a bit of a better price, but I'm very interested to sell. Aussie dollar, I want to buy. Pound Aussie, I want to sell. That's about it. Thank you very much for watching. You can catch me tomorrow. I have another joint segment with Alan, which I'm looking forward to. And now, don't go anywhere because we have the next guest coming in. Thank you. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? How are you doing? So did anything big happen over the weekend? I don't know. I was off the grid. I'm just kidding. Guys, it was madness. It was crazy. Yeah, wall-to-wall coverage, a lot of time on X, looking at videos, probably like everybody else, watching all the news segments. Just a lot of craziness, a lot of scared people out there. Not obviously in real life, which is the most important thing, but in the markets too, right? And just for the heck of it, I played a little game with myself to see if I could guess the VIX spike that I knew we were going to get. And you see on here, I did put a green line. I was thinking it might attack this double top, get up to 30, but looks like it did base out at 25 before starting its retrace. So got the retrace right, just didn't spike as high as I was guessing. So it's always kind of fun to play games like that when you know something big happens over the weekend, test your knowledge, and see how it works out. So anyway, VIX flew up to 25. It is trying to recover, though. That's a daily chart. I mean, it looks like the scaredness is coming down a little bit, so to speak. Remember the volatility index, the VIX? I mean, obviously it's a gauge of volatility, but it's also a gauge of the fear and greed out there. So anyway, I kind of told myself I was going to stay away from markets, at least to watch the first hour of the New York session open up. Obviously, at this point, Asia, London have finished out their sessions, and so just wanted to kind of see how that first hour of New York opened. So I did have like 6 alerts hit earlier today, but again, it's just a sit and wait. And I just wanted to see kind of how these things acted and reacted. Now, not all these are necessarily on the Edge Finder. As you guys know, I like to put alerts for in case something hops onto an Edge Finder, the Edge Finder. So a couple of these are not on here, but we'll just take a look at them anyway, just to give you an idea of how supply and demand zones work, but they don't always work for black swan type of events, right? So number one, I am watching, that's working so far, was the Swiss yen. Now, I do believe it is, it's currently off the list as far as Edge Finder goes, but I was kind of keeping an eye on this 4-hour demand here. This 2-hour demand. This 2-hour indecision candle right here. And you can see we just dropped into there and got a couple really nice wicks coming out of it. So it still very well could work out, but again, it's off the Edge Finder. So it's just one of these assets where I'm just going to kind of chill and sit on my hands. Going down here to the pound Swiss. This was another one I was looking at on a 4-hour chart. Okay, right here, and it is trying to hold. Okay, we did bounce into the 50 EMA on 4-hour chart, but I don't really look at it so much on a 4-hour chart to do the 200. So we're into the 200 EMA at the moment. Pound Swiss is off the list, so it's neutral anyway. So we're going to skip it. Looking over here at CAD Swiss, this thing just spiked like crazy. Spiked up like crazy. All these major gaps we had, some of them have been filled pretty nicely. CAD Swiss, though, I don't think this is one where I had anything major unless we dropped a little further down. So we'll skip that one. But Aussie CAD and Aussie Swiss, you want to talk about price action not caring about demand zones? There you go. And this is exactly why I, tried to not warn, but as always, nothing we do here is financial advice, but we can definitely encourage you. So if you guys remember on stream and on my morning stream before the stream, I was just cautioning people. It's a good idea to be flat on some of these, especially if you're in smaller time frames. Okay, trades like some of the trades like what Nick is doing, and some of the other guys where they're on higher time frames daily, they got a lot more wiggle room. But anytime you're on the smaller time frames, like for me, 4-hour, 1 hour, getting down into those time frames. Supply and demand zones are not going to hold when we have a black swan. So as you can see right here, we just chewed through 1, 2, 3, 4 zones. Now this zone at the bottom, perhaps looking at it on the 4-hour time frame, perhaps this one could end up working out, depending on how big of a stop loss one put on here. If I were to have wanted to get into this trade, if you'd go for a limit order, you take price up here to the swing high as a take profit. That's 105 pips. So what's 105 divided by 2? That's 52.5. So let's go find 52.5. So there you go. Right there. So we would have still been in that trade, but it's just too big of a risk, too big of a gamble for me, guys, on a 4-hour chart. Okay. 4-hour chart, just too big of a gamble. So just goes to show, you guys hear me flap my lips all the time about zones, but this is exactly why. This is exactly why I was warning or encouraging. Hey, it's a good idea, especially if you're newer, and especially if you're on the smaller time frames, just to be flat. Because President Trump did give us the 10 to 15 day deadline for the potential strike. Okay, this was a Thursday, 2 Thursdays ago when he kind of came out and said it. I'm not happy with them. One of the reporters asked how many, if it was inevitable. He said, well, we'll know in about 10 to 15 days. Well, that was the same warning when they dropped the bombs on the nuclear sites back in the summer. Okay, but did we make it that full time? No, same thing happened. 10 to 15 days was the deadline, but it was on day 9 when he dropped the bombs today or this over the weekend. So because of that, by itself, he's basically saying, hey, we're going to do this if they don't do this. So yeah, flat. And it's kind of funny because a Swiss yen, I believe it was one of these trades I closed out. And I normally set an alarm for 15 minutes before the market close on a Friday to make sure I'm out, make sure I'm flat. And it's funny, I totally forgot to do that for Friday of all days to forget. But thank goodness I actually remembered like at the last second because I felt naked sitting here in my chair. I'm like, why do I feel naked? What's the problem? Oh, you got to go close your trade out, dummy. So anyway, I got out of it and I'm glad I did. But Aussie CAD and then Aussie Swiss is another one. See, it doesn't care about my zones. My zones do not work. Nothing, almost nothing works when we have craziness like this. Okay, chaos in the markets. Right, 1, 2, 3 demand zones just chewed right through. So I just wanted to leave those up as a visual for you guys, just to see that no matter how good of a setup we think we have or a trading strategy, this will happen right here. This will happen whenever craziness happens. So anyway, that's that. And then, yeah, that was, oh yeah. And then Swiss yen as well. So yeah, just kind of eyeballing this. I am actually kind of interested in this. I just wished we had a score on the Edge Finder, but as of right now, we don't. So going to ignore it. As far as your risk, as far as the generalization of how these markets react, whenever you have an event like this, a war event or whatever, obviously risk off is the environment we're in. So that means being careful about buying things like pound, euro, Aussie dollar, and New Zealand dollar, right? Those are more the risk on, if you will, type currencies. And obviously with the safe haven currencies, the Swiss and the yen, I don't think they're really acting like, I believe Marco or one of the other guys said the same thing about Ivan actually, about the Swiss franc. It's not exactly acting like a safe haven, if you ask me. If we go look at the indices, okay, the currency indices, obviously the dollar is up, the Dixie, and it's just chewing through supply left and right. And then obviously everything else is down. So there's your axis. There's Australia down. British pound down. Canada down. Canada obviously has a big, influence from oil. We got the euro down. We got the New Zealand down. And all these make sense. So far, the Japanese yen, the Swiss franc, the safe havens, they're down as well. They're down with everything else. So, if I had to place money on, I would think that those would turn around at some point. But so far, they're just breaking away. And this is why I say, no matter how good of a strategy, no matter how good we think we have it when it comes to what we think is going to happen, things like this will happen. I don't know if that makes sense or not, but it does in my head. So anyway, very cautious on the currencies. Obviously, strength with the Dixie, strength with the dollar is kind of what I'm looking at as far as currencies go. But even the dollar. See, the dollar even blew through that supply zone, so I got to delete it. Possibly coming up to another one. We are in kind of a daily overall supply up here, so we could potentially get some bounces. Let's go take a look. Is there a 4-hour? Yeah, right here, 4-hour. It's a pretty skinny zone, if you ask me. So I don't know that I'm that worried about that. But obviously, the next higher the next higher supply zone that we have is clear up here. So we still got a little ways to go. I could definitely see the dollar, continuing to go at least to that point as far as the strength. So, but then, gold, silver going up. Silver obviously has a lot of conductor type uses, more so than gold. So it's a lot more volatile, but looking at gold itself, I go find it over here. Big gap up, exactly like what Nick said at the outset of the show, guys. Big gap ups and retraces. I mean, I'm really right there with the rest of the guys as far as just waiting for some retracements on some of this stuff. Gold, I do believe, is neutral +4, silver a +3, if I remember right. So they're not even really giving a great signal to go out in here and buy it from a fundamental point of view, but geopolitics is a whole other animal, guys. I think it's the craziest reality TV show there is, talking about politics, guys. It's, it's not the sexy thing to be talking about all the time, but I tell you what, it's good to know when things like this happen, these black swan type events. So, but anyway, I would personally need quite the retracement going back going back to this 4-hour demand for me to get excited about it, which is also kind of right here with this previous double top that kind of turned in, to support, former resistance becoming support. And you see the overhead supply zone. So we're still quite a ways away from it. If we get a pullback, if we can get EdgeFinder to agree with us, I really like this demand down here. Like it a lot. So, but yeah, that's gold. And then again, silver, just taking a look at silver. It's not too far away from a demand as well. But yeah, it's just a little, it's a little sketchy right now. A little sketchy. I wish we could get EdgeFinder to agree with us over here with gold and silver. I really do. Gold, yeah, see, gold's still a +4, silver's a +3, like I said. So, guys, I'll be on here for probably another 15 minutes. If you have any specific questions, thoughts, assets you'd like to look at, definitely let me know. I can bump to the top of the list. But yeah, as far as Bitcoin, obviously risk off environment. But look, it's kind of retraced itself. Now, Bitcoin obviously is the only market that was open, or I should say the cryptos, when the attack happened, and that was over here on this big ugly red candle. So, risk off, got the big drop, and then we got a spike up. I mean, it recovered everything and then some. Well, this is where a demand zone works. See, this is a demand zone I had drawn up over here. Now, I wasn't trying to get into it. I flirted with a trade on this, but I did not have the balls to do it. But I do have 12 years of experience in seeing stuff like this happen. So, like, even though I didn't want to get in it, there was a group of people down here in this consolidation zone, this demand zone, these unfilled orders down here, okay, that had other plans, and they took price up. Obviously, looks like silver hit. Obviously, we also bounce into this 4-hour supply zone up here, right here. Okay. So that, that's where I was considering taking a short, but I just didn't want to do it. To me, that was too many candles to the left. It's a lot of time to be putting in full positions. So I was thinking there may not be a whole lot left there to have a sustained risk off type move. But you can see when we bounced in, we had a 4-hour and a 1-hour confluence. This is our 1-hour candle right here. We got that first spike in there, and then we got another spike, and it dropped pretty decent. So that right there might have been, depending on how you played your stop loss, maybe a 2-to-1. But it just wasn't anything I was personally interested in getting in. So, and plus, Bitcoin obviously is off the list, the EdgeFinder. Off the list. So, just going back over here to the EdgeFinder. And then, honestly, before we even get any farther, the COT report was a little bit of interest. Now, I'm not, this is more geopolitics to me, guys. It's kind of interesting to see the big banks and institutions loading up on the Dow. Okay, a 5% week-to-week change. That's a pretty big change for the risk-off atmosphere that we just bounced into, right? So I'm wondering if they're kind of second-guessing some of these long increasing their long exposure. But yeah, that's Dow at 5, Russell at 1.5. S&P minus a half, Nasdaq at the bottom -4, okay, -4.3. So that's a little more understandable. But I just wonder, I don't know, you guys tell me, what do you think about that? Do you think that they're probably second guessing some of their Dow long exposure that they added? Now, this report obviously accurate as of Tuesday, okay? It's the one downfall with the COT report is it's always 3 days late when we get it fresh on Friday. But as of Tuesday, they were pretty long. I wonder what this next COT report is going to look like when we get it on Friday, which will be accurate as of tomorrow. Okay, tomorrow being Tuesday at the end of the market, New York market session. Will not surprise me to see Dow, completely flip to the opposite side, shorting, getting rid of those positions from Wednesday, Thursday, Friday, right? The 3 days they had before. I guarantee it's probably going to be the opposite. It's probably going to be heavily on the red side. Would you guys agree with that? And then same thing with gold. I bet you we're going to see some extra gold exposure coming up on this next COT report. And again, we get that on Friday, accurate as of tomorrow. So yeah, that's kind of the downfall with the COT is we don't get to see Wednesday, Thursday, Friday. Right? which is the most important part of the trading session. I mean, trading week, Tuesday, Wednesday, Thursday. I think I might've mentioned it a week ago. That's the biggest days for the institutions to be getting in their positions. USD will be up as well, Agent Dark. Yeah. Yep. Totally agree with that, man. So yeah, I'm just basically sitting on my hands, guys. I mean, I told myself I was out for the first hour, like I said, the market session. I'll regroup after this stream, but think about it. We've got Aussie Swiss at the top of our list. Well, Aussie's more a risk on asset, is it not? And Swiss, obviously, the safe haven. So do I really want to be shorting a safe haven and buying a risk off type of currency? I don't know. So I'm just kind of puzzled right now. I'm just kind of in wait and see mode. Because, yeah, obviously, when you look at the fundamentals, and you look at the sentiment, and you look at the trend, that's screaming buy. But this is a great learning experience for everybody, including myself, guys. I mean, I've been studying this stuff for 12 years, but I haven't seen that many black swan events. We had the flash crash in my trading tenure, and then we had the unpegging of the Swiss franc back in 2015 when they depegged themselves from the dollar. Okay, they had a support, kind of an invisible support level at, I think it was 1.20, if I remember right. So everybody just thought, well, that's an easy place to buy. Okay, price come down to 120, bounce. Price come down to 120, bounce. And then a lot of institutions were just heavily adding their longs at that point, only to see them pull the plug and then prices just go crazy, drop like 1,000 pips, 2,000 pips, depending on which asset was paired to the Swiss franc. The largest Forex trading firm in the world, I do believe, was in New Zealand at that time, and they went bankrupt. They went defunct. They went under because they were heavily leveraged to the upside. So that's probably, outside of this weekend, that was the biggest experience I had with black swan type events. And I was in class when that happened, guys. I was actually in my Forex class at Online Trading Academy when the Swiss National Bank depegged from the dollar. So I got to see that live firsthand. Our instructor came in and was freaking out. And it was just interesting. Of course, we're all, wet behind the ears in class because we were just learning Forex at that point. This is 2015. And so we didn't really know what was going on until he explained it. But after he finally caught his breath, he explained the whole thing to us. So it was quite interesting and quite unique. But yeah, that's like 2. And this is now my 3rd big giant event. Okay. Big giant geopolitical event. Obviously COVID, we had COVID as well. So I guess that's 4. So I'm just going to take the rest of the day, most likely, and just sit on my hands and study. Remember, trading's all about understanding history. I spent a lot of time on the weekend doing that. That's really what it is. We're just history instructors. If you stop and think about it. Okay, when we're presenting and helping out with trade setups and things of that nature, because what do? We have to resort to the history. Well, what happened the last time this happened? What happened last time the NFP report shot up or missed? What happened the last time we had wars? Interest rate decisions, everything. This is history. This is all history. So hopefully you like history as a fundamentalist. If you guys are new to the fundamental game, it's going to help. It's kind of funny. I didn't care for history in high school. I really didn't. But I started gaining the appreciation when I started trading. What we got over here? Major pairs? Yeah. Let's do it. Let's take a look at the majors. So I do believe, just from a 30,000 foot view, yeah, we got dollar yen at a +6. I do believe we got pound and euro dollar. So I think right now I'm the most interested in pound dollar. But yeah, let's take a look at these. So Aussie dollar, just taking a look at this thing. Now we did bounce into this 4-hour supply zone. We've also bounced into this 4-hour demand zone. Well, actually, I don't think this was 4-hour. Okay, this is a smaller time frame, probably 1 or 2 hour, I think it was. So we're kind of just going sideways between these major zones. So let's take a look over here. Yeah, I was basically looking at this from a 2-hour time frame. So a couple bounces here. We had a bounce here. It's just going sideways right now. I would, all things being equal, let's just say it was on the edge finder, buy or sell. I would personally prefer to wait and see this thing break out of that sideways movement, which is part of the reason why I drew up this 4-hour demand zone all the way down here. So, have no idea what the edge finder is going to do for Aussie dollar, but I was basically looking for a potential move like that if it comes on as a bullish asset. Okay. So that's probably not on my list right now until we start, like I said, start breaking those structures. But looking at the euro and the pound dollar, okay, on euro dollar, you guys remember I drew this up last week where we wicked into this 4-hour confluence, this 4-hour daily confluence. Okay, we've obviously blown through that when the market opened yesterday here in the States. And then we come down and tested this other one at the bottom of the daily zone. It's just chewed right through it. Okay. So this is another reason. I'm just not, I don't know. I'm just not too excited about buying supply and demand right now. I'm really not. Not till it starts behaving a little more and start respecting some zones. So euro dollar, and obviously guys would be wanting to short this anyway. So it's no surprise it's chewing through that. What about if we retrace up? I have a alert a little higher up, 4-hour supply right there, guys. And you can see, and just looking at history, we bounced into this supply zone and got it bounced down. I did draw up a smaller time frame supply zone. We bounced in and we just took off. Now, in all fairness, that closed, not too far below it, and it was the geopolitics over the weekend that caused the move down. Okay, again, euro risk off. It's risk off environment. Euro is more of a risk on type of an asset, right? Dollar strength. So it's no surprise to see that. So yeah, I'm still looking at that, look at closing a gap for a possible short, but it's way up there. And also because, now that I'm looking at this, we've obviously bounced into these higher time frame demand zones at the bottom. So I definitely don't want to be shorting anything right here, guys. Not when we're bouncing, not when we're still in a higher time frame demand zone. Talking about this candle here before the big strong push up, this consolidation. Pound dollar to me looks a little better. So all I'm asking it to do, if I get excited about shorting this thing, since it's a bearish asset on the edge finder, I'd like to see it close the gap because there's a supply zone just waiting right there. Now, we do also have a little bit of a zone forming in this area too. But if we get up to this area, I would think that we would probably go ahead and close the gap, guys. Now, remember, just because the gap is there doesn't mean it has to close right away. It might take some time. But depending on the speed of which it returns, is really going to dictate to me if I utilize the one I've got or maybe even take a stab at this one here. Okay, because that is a supply. That's a 2-hour supply, and it obviously would look just as good on a 1-hour, just incorporating a couple of these candles. But I would think that would be the higher probability one. Close the gap, close the inefficiency. Remember, the banks, the institutions, they like to attack inefficiencies because there's typically unfilled orders on the other side to fill their order in the opposite direction. Okay. Now, obviously, price is gapped on no liquidity, as you can see from the VSA, or as far as volume spread analysis activity. We've got a blue candle on that drop. That's interbank activity over the weekends, right? That's why we get the gaps. Interbanks, the interbank system, the central banks trading with each other and other organizations, other higher up financial institutions. So that's why we get these gaps. Long gold on the gap, Azen says. Okay. Now just be careful. I just would say be careful. I mean, just for me, again, I need a retracement. We did close the gap. Let me look at this a little deeper now that you mentioned that. Yeah. See, there just wasn't a whole lot of, and this is what's kept me out of it. If you look down here on our VSA, we got blue candles. Remember, blue is below average volume trading activity. Tick volume, if you want to look at it that way, right? Trading activity. There's definitely not, from what we see, it's just, I don't know. I just don't like the volume on that. I really don't. So good luck to you on that. You are getting a pretty good rejection. Okay. So yeah, good luck with that. I'm just personally waiting for this alert down here at the 5190 area, because this at least gives me a confluence of different sets of eyes of traders from the 4-hour time frame, which is the green rectangle, to the 1 hour, which is this dash line I have right here, this white dash line. So anyway, and then just to finish up on the majors before we get out of here. Sorry guys, the time flies quick. That's my main. That right there is my main area of interest, 134.70 at the moment for pound dollar potential shorts. I think that's pretty much it. Yeah, just more supply zones that just got chewed through because of the geopolitics. We closed. Oh wait, you know what? Yeah, demand zones. So with price gap down. So this is reasons right here why not to be in a trade when you know there's about to be some stuff going down. It does not care about zones when there's chaos and fear. So if anything, just keep that in mind, guys. I mean, this thing's going to last potentially weeks. You guys have all heard this as far as the campaigns and finishing the destruction of the missiles, the inventory and all that. So just be careful. Risk off. That's your homework assignment for the day. Go use Grok or DeepSeek or whatever AI search you like to use and just study up on risk off. Hey, how does this war affect the assets? How does it affect risk off? And always verify that stuff too. Usually it'll give you sources whenever it creates an answer for you, talking about Grok or whatever. But again, trading is nothing but the study of history. We have to understand the history to be able to look ahead to see what we want to trade, right? And trade it with confidence, not guess that this is going to happen, or, at least get an educated reason, an educated guess, a hypothesis, grow that hypothesis. So study history. It'll help you guys in the long run. And the more of these types of events you see, the better you'll be equipped for the future. So with that, guys, looks like we've already been up here half hour. I'm going to hop out. We'll be back tomorrow. Okay. So be careful. Be careful. Be careful. That's your 3 tasks for the day. All right, guys. Take care. Talk to you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.